Plenty of red ink, left-hand side of the screen. Dow's off 120. The Nasdaq's coming back a bit. It's now down just 42 points. Gregg Smith with us this morning to look at the market. All right, Greg, welcome back. Good to see you again.
Good morning.
In the first 100 days of this year, the stock market performed very well indeed. Now, historically, does that mean the rally continues?
Yeah, well, good morning, Stuart. I think for investors living in an election year, they're always at ends and always very nervous. But I think the first 100 days of the performance of the S&P this year actually bodes well for the market for the rest of the year. And here's why. And we'll talk a little history and a little statistics for a minute. But going back in time, in an election year, anytime you see the market up in the first 100 days, 93% of the time, the index actually finishes in the green for the year. There's been three other times in history, three other election years in history. You had 1996, 76, and 28, where the market was actually up greater than 10%, and those were great performing years. So far this year, we were up a little over 10% in the first 100 days. I think it bodes well for the rest of the year if you want to go by what history tells us.
Music to our historical ears. Well done, Greg. Is AI a bubble? Does it show any bubbleistic tendencies?
Well, it's a good question, Stuart. The back of the thumb that I always used to have for the market was anytime I would see a company put their name on a stadium, whether it was Enron, Adelphia, CMGI, go back in time, or I had my taxi driver asking me if he should buy more Qualcomm, as was the case 25 years ago.
I remember that.
I would always say could be in bubble territory. But I think many Wall Street professionals today would say that we're not quite, this phenomena doesn't quite deserve the bubble title yet.
It's not .com land, is it?
Well, it's not .com land. I think that's a great comparison. It's hard to find the right analog in making a comparison, but if you look back to 1995 to 2000 to the .com bubble, the market went up for 5 years, and in the last 2 years we had incredible increases in the Nasdaq, and that was in the face also of Fed tightening. And but I think the market today is more akin to 1995. Companies are more tethered to fundamentals, and I think that we're not quite in bubble territory, despite the fact we have Mick Jagger-style groupies asking the NVIDIA CEO to sign their chest. I'm sure you get that on 6th Avenue every day when leaving the studio.
It's endless. It's endless, Greg. Give me 30 seconds. I mean 30 seconds. Why you like DraftKings? Lots of people talk about it.
DraftKings, look, let's just start with the business of sports, whether it's F1, whether it's Caitlin Clark in the WNBA, or the increasing rights of professional major league teams, as well as the associated broadcast rights. The business of sports, the breadth of sports is growing, and it's becoming increasingly more and more popular. It's bringing more women into it, again, because of the WNBA. And I think DraftKings is becoming the leading player. They have about
$37 a share. Where's it going?
I think we see this trade back at 50. They just completed an acquisition of a great company called Jackpocket, which was the leading iLottery company, allowed people to play the lottery on their phone. And investors in that deal just got cashed out last week. And I think a lot of that stock is for sale now and will get cleaned up, and we see the stock trade higher.
DraftKings to 50, says Gregg Smith. All right, thanks, Greg. Thanks for joining us.
Thank you.
Welcome back.